putting it all together, we'll begin with a discussion on the development of your trading plan. Also, how to use the geometric trading worksheets provided, and how to keep a trading journal. Let's first discuss our trading plan. I'm sure we've all heard it said, fail to plan, plan to fail. It's really important that we have a written trading plan. Now on the page where I have posted the videos for the initiate level, I've included a file for you to download. It's a Market Analyst 6 workbook, and if you simply double click it, it will open up a workspace in Market Analyst, and I've got a sample trading plan in there for you to have a look at. We'll be considering that in just a moment, but it's really important that you write down your own individual trading plan. So I've given you a place to start. Maybe you have one already. That's great. I hope you do. But it's really important for us to, first of all, establish what our trading philosophy is. So just the big broad strokes of how you want to trade. My style of trading, I refer to it as geometric trading, using the science of geometry. So that would be a philosophy that a person would use in their trading approach. The next thing we got to consider is the trading plan. Now, most people refer to a trading plan as pretty much a catch-all of your philosophy, your rules, your plan, but really if you break it down, there should be a separate philosophy, there should be a plan, and then there should be separate rules. So the trading plan is not as broad as the philosophy, but it narrows it down a little bit, and we'll look at an example of that here in a moment. And the last thing are your trading rules. And these are very specific rules that we have written down that is not really open for interpretation. Things in the trading plan can be open for interpretation a lot of times, but when it comes down to the trading rules, we want our trading rules to be very specific with little room for interpretation. And this is what really keeps us disciplined when the going gets tough in trading. And this is one of the reasons that we do need a trading plan. With any other business, there's a business plan. Is this not a business? So make sure you download the Geometric Traders Workbook for Market Analyst 6 from the Initiate video page. So let's look at Market Analyst and the Geometric Traders Workbook, where we'll look at our philosophy, our plan, our rules, and our geometric trading worksheets. So here I have the Geometric Traders Workbook here on my desktop. Market Analyst isn't even open. I can simply double click this file here. It opens Market Analyst and it will open up that workbook for us. There we have it. Now in this workbook I've created a few pages. Up here, this tab, we got the neophyte videos available here if you want to watch them. If you click this tab here, here's the initiate videos. So it's right there within Market Analyst. You don't have to open up another browser. And the first page that we're going to consider here, we got trading plan and trade worksheet. So let's look at the trading plan. As we discussed, there should be first a trade philosophy, and what I've put down here, the trading style used is based on the science of geometry. The trading objective is to enter trades according to the rules of the Gartley trading method for TRGs and TCGs. So a very general statement about the style of trading that you're interested in using, and also an objective. The next subheading here is the trading plan. We can call this whole thing the trading plan if you wish. That's what I've put up here on the tab. But the trading plan is just that. It is a plan. It doesn't have specific rules. So let's narrow this philosophy down into a plan. As a reminder, please feel free. You can go into this notes chart. It's a document that you can edit yourself. There might be topics in here that you feel don't apply. You can just highlight them, delete them, save it as something else, all kinds of things. But the trading plan, it says all liquid markets that offer leverage will be considered for trading opportunities, including global indices, treasuries, commodities, equities, and currencies. Pretty much I'm looking for anything on the planet with leverage. and that's me personally. And number 2, the single and scale out method of trade management will be utilized with all open positions, and capital exposure for any single position is not to exceed 3% of trading capital available. So these numbers are variable, 3%, 5%, 1%, or less. They're really dependent on your individual risk tolerance. Next point here, in the event that I experience a 50% intraday drawdown, all positions will be liquidated and all trading will cease until I objectively determine the underlying reason why such an event took place. So this is one of those catastrophic rules, and this is one of the things I learned from reading about all these market wizards, is that after they all blew up, they all came to the realization that don't throw good money after bad. If you go through a 50% drawdown, don't desperately try to trade yourself out of the hole. There must be something seriously wrong if you have a 50% drawdown. So shut everything down. At least you save half your capital and regroup and try and figure out what's wrong. The next point is money in my trading account is risk capital only, and my lifestyle will not be greatly affected by the loss of said capital. So I think we all know this. We've heard it. If you open up any account, and trading and speculating in the financial markets should be only reserved for your risk capital. So make sure that that's the case. The next point is I will use the scanning capabilities of market analysts to find TRG 786 and 618 and TCG 786, 618, and 486 setups on daily data. In addition, I will visually look for patterns on intraday data with the Gartley pattern identifier tool in Market Analyst. So remember, we could only scan for daily data, weekly data, monthly data. So if you want to look for Gartleys on intraday data, you're going to have to do that visually. And one of the things that can help you is that Gartley pattern identifier tool. So you can apply that to all your different charts that you want to keep an eye on. The next point here is I will not modify my trading plan with open positions. So what that means is if you want to go in here and change the rules, don't change the rule in the middle of a game. If you have open positions on, make sure that you do not change your trading plan, because once we're in a position, we're emotional and our heart's connected to the market, and that is not the right time to start changing rules. You got to do it objectively when you're flat, when you have no positions on. Speaking of rules, now let's narrow things down from the trading plan to the trading rules, and this is when we get very specific. Okay, the first rule here, once a pattern has exceeded the B point, I will add an alert to the Fibonacci retracement level that signifies pattern completion. The hard part about trading Gartley patterns is it's easy to see them after the fact, but we need to catch these things before they complete. At the completion of the C point, we can go ahead and make all the projections we want to identify a potential Gartley pattern. However, it's not until the B point is exceeded that we can get serious about it. So if we're cognizant of when the market exceeds the B point, and the Gartley pattern identifier and scanner will only give you results after the B point has been exceeded. Once that's happened, we can go ahead and add an alert to the Fibonacci retracement. The next point here, when the alert is triggered, I will use the 1-bar reversal signal to enter the market on a stop. So remember, we can use the 3-bar trailing stop, move the settings down to 1, apply that, and use it as a 1-bar reversal method. What this does, it keeps us out of trades where it might be moving quickly in one direction, and we're waiting for just a little bit of confirmation to go the other way to put the trade on. The next rule here is trade setup conditions will be considered invalid if the market exceeds the X point of the pattern, or if the market exceeds the projected retracement level and touches another Fibonacci level. Okay, so let's say we have a bullish TRG 78.6. We put our stop below the X point. If the market goes beyond the X point, we know the trade's invalid. So that's pretty obvious. We probably would have a stop there anyways. But the other part here is, or if the market exceeds the projected retracement level and touches another Fibonacci level. What we're talking about there is, let's say we have a TCG 48.6 and the market touches 48.6. It looks like a valid trade setup, but now we're waiting for a 1-bar reversal. But the market keeps going and then it gets to 61.8 and we still haven't had a 1-bar reversal. If it touches 61.8, cancel the trade. If it hits 78.6, cancel the trade, because the bias is towards 48.6, and if the market starts going to other Fibonacci levels, it's not really TCG 48.6. So you're going to pull the plug if it touches 61.8 or some other fib number. The next point here, stops for TRG, TCG 618486 setups will use a 3-bar trailing stop until the first target is hit. Then we use the regular single and scale out rules. So if our stop is not at the X point and we're looking at a TRG 618 or 486 and we get filled, we want to use our single and scale out methodology still. Where are we going to put our initial stop for initial risk? If we just simply apply a 3-bar trailing stop, you'll quickly see where your stop should be located, and that will help you calculate your first target and your second target. So just leave the stop where it is until hopefully you hit the first target. The next point is protective stops for the TRG TCG 786 setup are just beyond the X point of the pattern. That's pretty self-explanatory. And the last point here is I will maintain a hard copy trading journal with screenshots of all my trades along with a geometric trader worksheet. Okay, I've mentioned this geometric trader worksheet here a couple of times now, and this is it over here. Let's click over here, and that's your worksheet. Now, as I mentioned in the trading plan, the last sentence here, I said maintaining a hard copy trading journal. So please do yourself a favor, go to the dollar store or wherever you need to go, Office Depot, and get a 3-ring binder. Get a good one, and also get a 3-hole punch. Make sure you got a good printer and lots of paper. And what you're going to start doing is every time that you do a trade, you're going to print up one of these geometric trader worksheets and a screenshot of your trade. And you're going to keep a little journal with notes in it about the trade, whether it worked, whether it didn't, how much money you made, etc. And that's going to be really important as we move forward for you to go back and look at those sheets and look at especially the ones where you don't make money. The ones where you lose, you need to look at those over and over and learn from them. It's those sheets that you learn from. The ones where you win, you don't learn much because it did what you thought it would do. But it's the ones when you lose, they're really gold. And please don't be like an ostrich and bury your head in the sand. And I know they don't do that, but anyways. So here's your geometric trader worksheet. And you can print these off, and or you can go ahead and fill them out right within the software here if you want. So date, you can when you look at a trade and you're going to put a trade on, just before you get filled and you put your orders into the market, this is when you start filling it out. So let's say the Gartley pattern has exceeded the B point and you have your alerts on, and the alert goes off and it says that you're at the fib level, and now it's time to keep an eye on the 1-bar reversal. Now you can actually go ahead and start putting your orders in the market because you know where your initial stop is, where your target is, and that is the time when you're going to print this up. So print it, and then take your pen and paper, or your I would use a mechanical pencil is what I like to use, and fill out the date here. Then it says here, objective, enter on a TCG TRG 786 618 486. What you need to do is just simply circle one of these. Maybe you want to do a TCG 618, you would circle TCG and then circle 61.8. The setup, I've left it static. Simply market touches fib retracement. Entry is you're either going to buy or sell with a 1-bar reversal. You might want to circle one of those two. Then under protective stop rules, I've copied the rules from the trading plan right here, so it's really clear in your mind as to what we need to do. Next, entry order. We circle whether it's a buy or sell, how many, what market, if it's futures, put the month in there, and the price, whether it's a limit order or stop order. If you get filled, put the date, the time, the price, and maybe it went sideways forever and you feel that it's invalid, Gartley pattern's invalid, you can cancel the order, put the number there if you cancel it. Profit targets. Once you know your initial stop and your target, you'll calculate your profit targets. Remember, the first one's 50% of initial risk, you put that there. And then 100% of initial risk, you put that number there. Your initial protective stop, put the price in here. And then if you hit the first target, remember we're going to move the stop up, so you're going to put that number here. All these numbers can be calculated in advance before you even get filled, so it's really a good idea to have that discipline to write these things down and have them crystal clear in your mind. And then it says if second target is hit, change time frame from blank to blank and use a 3-bar trailing stop. So we talked about this in the Gartley trading method book, that if you put on a position and it hits your second target and you're trading off a daily time frame, you could right here you could say change time frame from daily to weekly. Or if you're trading off a weekly, you go weekly to monthly. Or if you're trading off of 45 minutes, you go 45-minute to daily. And so you just write it down here. If you hit your second target, you want to change the time frame from the chart you're trading to the next higher time frame. Once you've executed your orders and you've been filled and you've been stopped and you hit your targets, you're going to write everything down here. So your closed trade summary, first contract or lot of shares. You already know your entry price. Remember your fill price, your entry price. You know what that is. So all you need to do is write down your exit price, your P&L, how much it costs you in commission, the cost of the trade, and then your trade P&L over here for that particular unit. So that'll be your first target. Your second target, ideally you put the exit price here after it's been filled, your P&L, your trade cost, and your trade P&L, positive or negative. And then the third one over here, our lottery ticket trade, exit price, P&L, trade cost. So you have results from all three positions or contracts or lots of shares over here. And then you add that up and you have a net number that you put down here, total position P&L. Under comments, this is part of your journaling. It's important. Just write down anything at first. At first you'll be like, oh yeah, I'll remember this all. It's clear as day right now. I'll remember this. Well, guess what? We will forget. So just, if you haven't done this before, just write down anything. Say good trade or bad trade, or I was mad, or just I was having a bad day. You can just write down anything that you want in here and try to think about it. Try to go in the direction of adding more and more useful information to this. What worked? What didn't? Were you disciplined? Did you change anything? Did you break the rules? Just things that you think you could have done better for next time. Write those things down, and over time you have enough of these comments and you'll start to paint a picture here. And this is really what's useful. So that's your trader's worksheet. Like I said, you want a 3-ring binder. Print this, fill it out, 3-hole punch it, put it in the binder, and then go and print up a chart of whatever it is you're trading, and make notations on the chart as well. Use the text box and type in things there to describe exactly what you're doing and why, and all the supporting reasons of why you're going to do this trade. To print up a chart, typically you go over here, copy page to image file. You can do that. Or the other thing that you can do is once you have a chart open, let's say for an example, we have this open here, you can just go over here to the left and click this print chart button and that will print it up for you. If you want to add any text, you can just go over here to tools and go over to drawing, text box, and then you just put that there, whatever you want. Add text, like that. There's also some interesting symbols in here too that you can use. If you go over here to drawing and go to symbols, there's a number of different arrows and numbers and happy and ugly faces that you can put on there, right? So feel free to do that and put as much information as you can on that chart, because like I said, that's going to be your journal. You're going to learn from that. So that's Geometric Traders worksheet. There's the trading plan, and this is all within the Geometric Traders workbook that I've put on the video page for the initiate level. So go ahead and download that and play around with it. So as I mentioned, we want to keep a trading journal, and these are the supplies that you need to get. The 3-ring binder, the 3-hole punch. Make sure you got lots of paper, and if you don't have a good printer, purchase one. Don't hold back on that either. Get a good laser, color laser if you can. And that will allow you to print up your charts and print up your geometric trading worksheets, and just punch those and make lots of notations and put those in your journal, because you'll be that's going to be one of the most important things that you can learn from as your personal experience going forward. This is something that all professionals do, so don't do a shortcut. If you don't have these materials now, stop this video, go online and order them now, because this is a very important thing that all professional traders do. So do yourself a favor and order the materials now. One of the other reasons that you absolutely must keep a trading journal is at the end of the year, you're going to compile your annual rate of return, and that again is something that professional traders do. So just imagine yourself as a fund manager. You have your own little fund, and I don't care how big or small it is. I just want to see a percentage annual rate of return at the end of the year. And as time goes by and you do enough trades, you'll really develop the confidence. You look through your trading journal, you look at the annual rate of return, and then you'll start to compile these reports for a number of years. And with this, armed with this information, not only will you build confidence in yourself, but eventually if you ever wanted to raise money, these are the steps that you need to take now to be able to market yourself in the future. So if you want to go in that direction, I can help you do that, but we got to keep it simple to begin with, and we can move you in that direction later. So the definition of wisdom is the application of knowledge. We can have all kinds of knowledge about a particular subject, but the application is really what will make you wise. So why don't we do that? Let's go step by step through a couple of trades together using our trading journal, our worksheets, and our scanner and the tools available to us. So let's put it all together now and look at our first trade example. Trade example number 1.